Well, hi there and welcome to the ISE FX Options Weekly Outlook for July 20th, 2009. This is Jason Ayers of OptionSource.net. As always, we're going to start with a look at the U.S. dollar. And of course, the U.S. dollar weakened against most major currencies, appearing to have broken the bottom trend line of the sideways triangle that we have been watching on our weekly chart. Now, although momentum supports a continuation to the downside, the index still remains within the 79.80 focal zone. With support here, we can't rule out the possibility of a bounce, taking the index into the 82-83 range. If support does not hold here, a move lower into the 76-77 box is a high probability. As we can see here with our daily snapshot, all of our major focal zones near term still remain intact. Well, the U.S. dollar lost considerable ground against the Canadian dollar as seen here in the ISE FX Options pair value CDD. After a break of 114.5, the pair value traded down into our 111-112 focal zone. Now, after such a major move, a snapback is not unrealistic, likely testing resistance at 114. Failure to hold 111 brings the 107-108 box into play on the downside. Well, the U.S. dollar completed a natural retracement against the yen, shown here in the YUK. After a major sell-off 2 weeks ago, the dollar finished this week positive, testing resistance at the lower range of our 94-95 focal zone. Continued strengthening brings the 96-97 zone into play on the upside. However, rejection at 94 will bring about a test of the 92-92.5 level, with the possibility of an extended downtrend testing 90. All right, let's take a look at the EUI, the US versus the euro. The pair value finished the week just shy of the 70-70.5 focal zone, and although a completion of the move is expected, any strengthening of the dollar is likely to meet with resistance yet again at 72 to 72.5. If the 70-70.5 level does not hold, we will expect an extended downward move into the 67-68.5 focal zone. Well, the U.S. dollar finished the week off of its lows against the pound as seen here in the BPX. With a move back above 61, we may see yet another attempt to breach the 62-62.5 resistance level, with the next target identified at 63.5-64. If the U.S. dollar begins next week lower, a move back down to test that 59.5-60 focal zone is likely. The AUX, reflecting the US against the Australian dollar, sliced through the 126-127 focal zone after the anticipated pullback last week. Now, after such a big move, it is not unrealistic to expect a retracement back into the 126-127 range. However, failure to do so will have us targeting the 121-122 box on the downside. Let's take a look at a few of our key points. First of all, the U.S. dollar index pulled back but hovers at the 79 support still. Momentum now favors a test of our lower focal zones. The CDD dropped significantly to test 111-112 after such a move down. A moderate retracement is anticipated, which may test a 114 resistance. A close below 111 opens the window for a deeper retracement into the 107-108 box. The YUK retraced as anticipated and is testing resistance at our 94-95 focal zone. Rejection here will likely yield a retest of 92-93. The EUI broke below 71, and although a moderate retracement is expected, we will likely see a retest of support at the 69-70 focal zone. The BPX dipped below 61 but closed back above, suggesting a possible retest of the 62-62.5 resistance. A break back below 61 will likely yield a retest of the 59-60 box. Finally, the AUX dropped significantly, slicing through the 126-127 focal zone. We may see a test of resistance back into this 126 range after such an aggressive sell-off. However, continuation brings the 121-122 box back into play. And this has been your ISE FX Options Weekly Outlook for July 20th, 2009. I'm Jason Ayers of OptionSource.net. Thanks for joining me here this week. We'll see you here next week.